with us, Head of Research at Prabhudas Lilladher. He's joining in to take some questions. Amnish, great to have you with us here. Thanks very much for your time. Do you have coverage on Man Industries? We just spoke with the management.
No, we don't cover Man Industries, Prashant, but suffice to say, as such, I think the segments are doing well. All the, you can say the processors of steel, they are doing quite well as of now.
All right. Amnish, talk to us a little bit about the market then. Last 2 or 3 days, the texture has been turning a little more nervous now, right? From the highs, there has been some selling. What kind of feedback are you getting from clients, your clients? Is there a little bit of, sort of jumpy sentiment out there that maybe at very elevated levels, there is this sort of instinct to take profits as well?
The main thing is, Prashant, in my view, there is no actual trigger left in the market because the corporate results are there. We have seen interim budget and the markets are more or less now reconciled that the current regime will, you can say, come to power in the next elections. So incrementally, if you look at, say, corporate results, they have been, I would say, mixed sort. So the market clearly lacks triggers. For example, you look at, say, interest rates. So there is nothing going to happen, say, maybe for another 3 to 6 months. So that is why the market has become very, very stock specific, and the sectors which have been running up very sharply over the past 6 to 12 months. So there is some element of profit booking, which is also being seen at higher levels.
Okay. The other stock I wanted your thoughts on, Amnish, hi, good morning, is Ashok Leyland. Came out with numbers. Now, frankly, the numbers were not that impressive, but the margin performance has been good, decent. And if you compare it to its peer like Tata Motors in the commercial vehicle space, the numbers are better than Tata Motors. So do you think that, Ashok Leyland is still a buy, or would you be cautious about the sector on the whole?
You see, if you look at the commercial vehicle as a sector, in terms of tonnage, they have already crossed the previous peak, at least I think 3 quarters back. Now, Leyland's call is yet to happen. Yes, their margin delivery has been good, but if you look at past couple of months, the volumes have been pretty tepid. The second factor is that if you look at the commentary which is given by Tata Motors, they are expecting that the CV volumes are likely to be under pressure for the next couple of months till the elections are over. And then there is some, you can say, momentum again which comes in the economy. So I think if the next couple of months volumes are not going to give you any positive surprise, or they are not likely to be, say, in good positive territory, so I believe that in the near term the stock might not perform from the current levels. So although I would say the P multiples are in terms of target, there might be some upside, but as of now, unless and until we see a big revival in volumes couple of quarters down the line, I think we might be looking at, say, you can say last maybe 10-15% of the return in the stock, because the stock has rallied massively in the last 2-3 years.
All right. Hi, Amnish. Good to see you in. What about, Bharti Airtel? That was a big number that came in overnight. The stock is more than 1,000 rupees odd. How do you read their operational performance and your view on the stock?
Bharti, structurally, we remain positive because the main thing is there are now 2 players, Reliance and Bharti. And our belief is that in the run-up to, you can say, if Jio is to come out with the IPO, if they have to improve the operational performance, and over a period of time, the ARPU should catch up. 5G is also catching up. And so structurally, I think everything is now, you can say, intertwined around the telecom, whether it is, you can say, e-commerce, whether it is, you can say, banking system or everything. So I would say in the medium to long term, Bharti still, you can say, continues to look good. Yes, the stock has had a very good run in the last 3 months or so. So it might consolidate for some time, but in the long term, I think it will continue to generate good amount of cash, and we are positive on the stock.
All right. Let's do one thing. Let's take a quick break. Just stay on. We'll come back to you in a bit. Still with us. Amnish, I wanted your thoughts on what you should be doing with banks now. There seems to be some problem pockets emerging. Do you buy into this dip? If yes, which are the stocks that still stand out for you, or do you stay cautious?
You see, as far as banking is concerned, PSUs have been moving one way in the past 3 to 6 months, and private banks, I would say, they have been relatively mixed. HDFC Bank, mainly because of high loan to deposit ratio, HDFC Bank has not performed. I think ICICI has done better, and maybe you can say to some extent IndusInd. Kotak has also been range bound. So as we go, I think into a cycle where maybe 6 months down the line, we might see some sort of, you can say, rate cuts, which the market is expecting. So I think we are now going into a situation where the growth rates of the banks, maybe for the next 12 to 15 months, will be totally a function of how their loan books grow. And the profit growths will be much more muted than they were earlier. The only comforting factor for banks incrementally is that today their NPAs are under control, and the price to book value at which even the leading private sector banks, if you take, or even you can say frontline PSU, they are trading at, they are lower in comparison to the historical averages. So in the near term, I think if you can say global interest rates, they remain volatile, or as Anuj said, US Treasury yields, they cross 5%, and there could be some more volatility coming into the banking stocks. Because if the global markets turn nervous, or if the FI selling happens, then given the weightage which banking has in the overall indices, then banks usually come under pressure. So that is why near-term nervousness, you can say, can't be ruled out in the banks. But in the, I would say, medium term, I think the trade should remain, and at some point of time, a few months down the line, I think banking should bounce back.
Okay, all right. Amnish, I wanted your thoughts on a couple of these PSU banks. I know we spoke about the private sector banks a while back, but in PSU banks, there's lots happening. I mean, of course, SBI came out with their numbers. There was weakness over there. There was a one-time provision, but be that as it may, Bank of India has reported net interest margins as a 6-quarter low. There's a double downgrade this morning from Morgan Stanley. If you have made money in PSU banks, is this the time to exit? And what's the way forward now?
You see, as I stated earlier, that in PSUs, there are clearly two categories of banks. In first category, you have got banks like, for example, SBI is there. Then you are having Bob is there, Canara is there, and to some extent now PNB is improving. And then the other ones are relatively smaller in size. Now, if you look at you can see the rally in PSU banks in terms of say the overall returns also, the top three banks, they have not given that much of returns as have been you can say the other pack. And given the fact that there also now the valuations have caught up and the investors have made, I would say, decent amount of money in the last 3 to 6 months, but one can look at, say, some partial profit booking there. As far as numbers are concerned, I think these kind of, you can say, some volatility here or there, or some, you can say, provisions or other things, they will continue coming. But the kind of undervaluation which the entire PSU packs or banks in general were trading at, as most of them were trading at, say, 0.5 time price to book, say, 6 months back. Now, that sort of an undervaluation is not there. Once you start them reaching 0.8, 1 time price to book, and you find a State Bank at, say, maybe 1.2 times, then obviously you can say where the longevity of earnings and where the sustainability of the business model looks far better, then definitely once you reach a threshold of around, say, 1 time price to book plus minus 10 bips, then one can switch to the better PSU banks or some of the private banks which they have not been performing for the past many months.
All right. Amnish, thank you for that. Stay with us. What